Hi there, I'm Gareth. Now, Italy is well known as the home of pizza, pasta, opera, and some rather nice red wine, but less commonly known as the birthplace of double entry bookkeeping, which is why, for this online lecture looking at the trial balance, I've come to Venice. Now, dealing with the trial balance is basically just a test of your basic double entry skills. I always use dead click. Dead tells me that debits can be expenses, assets, or drawings, whereas click tells me that credits can represent liabilities, income, or capital. So if we start with dead, debits can represent expenses, assets, or drawings. So as you're going down your list of account balances, any expenses are going to go on the debit side. So for instance, if you see rent expense, salary expense, telephone, electricity and other utility bills, they're all going to go on the debit side. Assets also go on the debit side. So if you come across motor vehicles, if you come across computer equipment, cash in the bank, and even the sales ledger control account, which represents the amounts of money we're owed by our credit customers, they're all assets, they all go on the debit side. And any drawings, so any drawings taken out by the sole trader, they go on the debit side as well. So that's dead. And what about the click side? What goes on the credit side of the trial balance? Well, liabilities do. So if you've got a bank loan, for instance, that you've taken out, or if your bank account is overdrawn, if you've got a negative bank account, they go on the credit side. Income goes on the credit side. So sales is probably the most obvious form of income you'll see, but also things like interest received. If we've received interest from a bank account, that goes on the credit side. And capital, so the amounts of money that the sole trader has paid into the business, that will be on the credit side. In fact, I think of capital a bit like another form of liability. It's just money owed to the sole trader rather than to a bank or somebody. So that's your click side. Now, I do adore Italy, and particularly Venice. I love the food, love the wine, love the people, love the temperature. It's a place I return to pretty much every single year. So it seems like a good place to talk to you about returns on the trial balance. Now, there are two types of returns you might come across: sales returns and purchases returns. And although students sometimes find returns a little bit tricky to deal with, they're just dealt with in exactly the opposite manner to the thing they relate to. So sales returns, effectively just the opposite of sales. And purchases returns, basically the opposite of purchases. So with sales returns, well, sales is income, and according to click, would therefore go on the credit side of the trial balance. Well, that means that sales returns, if your customers are sending you goods back, they'll go on the debit side of the trial balance. Similarly, purchasers returns, well, purchases, when I'm buying from a supplier with an intention to sell on to my own customers, purchases are an expense and therefore sit on the debit side of the trial balance. So if I send some of those goods back to my suppliers, those purchases returns would sit on the credit side of the trial balance. Well, looks like my gondola is here. Well, I've come here this morning to the world famous Rialto fish market to talk to you a little bit about discounts in the trial balance. Now, this could be quite a good place to try and negotiate a discount if you're buying a large amount of octopus, for instance. Now, in your trial balance, there are two types of discount you might come across. There are discounts allowed and there are discounts received. Now, discounts allowed is where you're allowing your customers a discount, perhaps as an encouragement for them to settle their bills early. Now, if you allow your customers a discount, that's going to reduce your profit and is essentially an expense of the business. So like any other expense, they will sit on the debit side of the trial balance. So discounts allowed go on the debit side. We might also come across discounts received. Now, discounts received are when you've received discounts from a supplier, perhaps to encourage you to settle early. Now, discounts received are effectively going to reduce your purchases costs, and because purchases as an expense would be a debit, The discount received will therefore be on the credit side. Or another way to think about it is you're receiving something that's like income and therefore goes on the credit side with other forms of income. So discounts received go on the credit side. Hi there. Well, I've come down to the Italian Riviera to talk to you a little bit about VAT in the trial balance. Thanks for joining me. Now, VAT can be a little bit of a funny, because VAT can sit on either the debit or the credit side of the trial balance. It depends on whether the input VAT, that is the VAT suffered on the purchases of the business, or the output VAT, the VAT charged on the sales of the business, is greater. Now, for most businesses, typically the output VAT will be greater, meaning that VAT will be owed to HMRC. And just like anything else that's owed to any other person, this is a liability. And CLIC would tell us that liabilities go on the credit side of the trial balance. Now, if on the other hand VAT is owed by HMRC back to the business, well, this is an asset. And like any other asset, this would be a debit in the trial balance. Well, that water's looking lovely. I think I'm going to go for a paddle.